The stock market has just fallen for the first time in a while, and while we expect this, how bad are things going to get? In today's video, we take a look from both an investor's and trader's perspective on what's in store next for markets. More importantly than any of this, though, comes back to the options markets and dark pool liquidity. Big options flow in Tesla has pushed it to testing the all-time highs. Meanwhile, HSI has shown massive dark pool activity, and as we've been discussing on this channel, it looked pretty likely that China was going to create some stimulus. They've now talked about it, and the market likes what it hears. But more importantly than any of this may be the flows that are really starting to go around. Has Wall Street started to take crypto seriously? Well, today we take a look at some records that we haven't seen in a while as Ethereum and alt markets take a massive dump over the last 24 hours. Is this a shakeout of retail? Let's look into it right now together. Guys, this is not to be missed. Join us. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be covering stocks, commodities, and cryptos with detailed news about the data, flows, and of course, the key levels we need to be looking at as traders and investors. It was a bit of a defensive day on the markets as semiconductors faced some possibility of investigation in China, but more on that a little bit later on. Let's talk about China's actual stimulus, because of course, the PBOC have announced they're going to go ahead with further stimulus in the economy. And this takes us to a point now that looks like it's a moderately loose kind of situation in China. Now, is this good? Well, of course, the stock market tends to like this. And as we suspected for a little while, it was really just ramping up. As you'll see in a moment, we're going to talk about dark pools. And it looked like there were quite a few dark pools, whether it was in KWeb, FXI, or any other of the major ETFs or even major stocks in China. It looks like the big guys were in it. And we've suspected for the last couple of weeks this was about to occur. A few of you posting some good comments, and obviously during our live stream on Monday, quite a few of you happy with that move. Rightfully so. Your patience paid off, and this just shows some of the things we talk about. If it's in the news, it's in the price, but more importantly, you've been able to see through what everyone's been saying about China and obviously look at the price action. And flows improved greatly, especially at the end of last week. And yeah, look where we are now. Let's talk about the US market for a moment though, because of course everybody is bullish. And this really shows you Goldman Sachs chart showing you right here, courtesy of Mike Zaccardi over on our X as well, links in the description down below. Risk on is basically maxed out. We don't tend to see this very often, and everybody is bullish. More importantly, we're starting to see leverage come in across the board. So it makes us start to wonder, where are we in this market bull cycle? Remember, we're 2+ years at this stage into the market bull cycle. October 22 low was the low for this run. And of course, now we're 2 years, 2 months into it. Now, we've seen some reads in breadth that are really weird. In fact, we're sitting at like 6 or I think 5 consecutive highs with more declining than advancing stocks. Now, of course, we've seen a decline in the S&P 500 for the first time in a while. And it makes us wonder, are we in this type of section of the market? That last kind of FOMO period that lasts for 6, maybe even 12 months before everything kind of goes bad. Well, let's break down one of the most important reads. And of course, everyone talks about the Mag 7, which is Tesla. But if you rip Tesla out of it for a moment, let's focus on the Mag 6. You'll notice the Mag 6 are actually making all-time highs combined together. And obviously, if you put the Mag 6 versus the other S&P 500 stocks, what you'll find overall is that we also have a breakout here. So the market's gone back to quality just recently. It's gone back to what really made 2023 great. Obviously, during 2024, we haven't really seen the uptick in the mag stocks as much, especially in the last 6 months leading off August. So we tend to see these ones lead. And I don't think this is a bad sign for the continuation of this bull market into December, into January. And the reason is simple. We're still seeing Wall Street do its little dance when it comes to EPS. Now, if you look at forward 12-month EPS, as we said, this actually is a pretty good chart. If you look at what a lot of people are showing you about 2025 EPS, when you look at it, it looks kind of nasty. So you've just got to remember that currently the market is still, in terms of everything, a discounting mechanism. It's looking at the future and it's saying, you know what, we still think there's good movement in the small caps, the mid caps, which we still think are going to give better returns early on and maybe even late December in this stock market, guys. And generally speaking, things are looking pretty good. So Yeah, I mean, the economy's strong. People's survey results are showing that most people believe they're going to be better off in a year's time. That's showing consumer discretionary through Black Friday, record sales, as we've already seen. People are feeling pretty optimistic. Now, are they misguided? Well, I think all of us know that when everybody else gets a certain way, then we need to be starting to worry about it. But one of the things we'll be looking for in 2025 will be breadth. Now, we've already seen a very rare breadth read. We talked about it in our weekend video. Not since 1928 have we seen breadth so strange in terms of advanced decline line not making new highs as we're making new highs consecutively. But it's always early. And remember, this is only just the beginning. We're going to actually be looking at the generalized trend. This helped us to figure out 2007 highs. It helps you to figure out 2019 into 20 highs. We're really looking for a market that breaks away with almost no breadth across the board consistently after being in a 2+ year bull run. We also need to think about as well record new highs. Are we making record new highs? Yes. Have we made a lot in 2024? Absolutely. But as we said, this stat looks horrendous when you look at it on paper. But remember, if we get this similar type of stat, a 50+ read in 2025, let's say we keep going bullish, should you be terrified about 2026? Frankly, yes, that would be absolutely terrifying. So remember, the stat right now is usually about 95 all-time highs, including the previous year. So in this case, we didn't get that any, of course, in 2023. So realistically, it's only by itself. It doesn't show the full turnout of the data stats. So remember, be careful what you look at. Speaking of bull markets, we're at about 70+% now of the October lows to where we are right now. Now, if you look at this very interesting circle here, the circle bull markets are those which are not preceded by recessions. The best of these, 1962 to 66, which is a market that we've been using a lot of analogs from, lasted 3.5 years and saw the S&P 500 gain 80%. However, the 5 triple-digit bull runs shown here all sprang from depths of recessions. So remember, the biggest gains you generally get are from recessions. Recessions are the time to buy markets, even though it seems like it's a terrible time to buy it. And that's where you get those big, long-lasting gains thanks to stimulus. Now, in this case, it's less likely to be any of these. So anyone that's thinking it's going to be a 400 run or a 200 run, yeah, I don't think that's likely. In fact, that is very low. What we're actually looking for is somewhere in this vicinity, between 70 and I would say about 100, 105. If we get to those levels in 2025, should you be terrified? Again, I would say yes, it would be worthwhile being terrified. When everyone else is feeling FOMO, guys, what should you be doing? You should be saying, well, let's question everything. Now, we've recently seen a sell-off in December. Everyone's kind of talking about it in the last 24 hours. Oh, it's the end of the bull run, blah, blah, blah. You know, we haven't sold off much yet. Do you expect that at this period? Well, take a look at the dates. At the time of this recording, it is the 10th of December here in Australia. And you'll notice that when do we tend to see weakness in December? Yeah, right there. And you'll notice again, this makes a lot of sense. It's got to do with mutual funds and the way that they restructure some of their stuff over this period of time leading into the end of the year. But remember, this tends to be quite bullish. That is the back half of December. Usually the Russell 2000 starts to outperform during that time as well. So that'll be interesting. In terms of visualizations, Grant Hawkridge has done a good chart here, which you can see overall kind of shows you how December generally plays. But let's remember the stats are super bullish for December. We can't be going against the market in December. The price action is bullish. The flows are bullish. The options are bullish. And of course, the data stats, when you lead in over 20%, 90% of the time, December's bullish. And even if it's bad, it's not bad by much. So that's pretty good. Fundstrat, Goldman Sachs, JP Morgan, everybody else, you know, they've all joined where we kind of already sat. We think it's 62.40 something. I believe we posted over on X. I'll get that post out into the end of the year. But in general, you still got to be bullish markets. What's our down case scenario at the moment? We'll take a look at that in a minute for the S&P 500 over the next week. But let's talk Bitcoin, because people are making a big deal about Bitcoin. It's slowed down. It's seen some massive dark pool trades we'll talk about in a moment. And obviously, Ethereum and other altcoin markets just crashed. And I mean, altcoins really got hit up. Now, why could this be? Well, funnily enough, I've been talking to people that are not in finance at all, and they were super hyper bullish. I mean, hyper bullish about 24 to 48 hours ago. Coincidence? I think not. A lot of people are leveraged up here at the highs in Ethereum, Bitcoin, but more importantly, all these other coins, Pepe coin, Baby Doge, and many others. Now, what does that mean? Well, everyone's piling in like it's alt season already. And of course, I still think that we're somewhere in this vicinity here where alts are really going to get pumped, dumped, and all around. So you've got to be a little bit careful about where you are at. But let's look at the stats. We knew Ethereum was going to be more bullish, and has it been? Yes. Look at the inflows since we started talking about it. Wowzers. Ethereum absolutely being the standout of last week's data. And of course, this shows you why we flew all the way up to 4K. Now, does it make sense to find resistance here? Absolutely. Have we still closed to a bullish level? Yes. Does that mean that we have to expect pullbacks? Yes. And when they happen, are we going to get bought up? Generally speaking, yes. I don't think you see these types of flows into the second biggest crypto in the world without them being backed up. Here's another interesting one. Bitcoin price versus balances on the actual exchanges. Now, generally speaking, if there are a lot of Bitcoins on the exchange, you need to be a little bit more terrified. Guess what? There aren't many. No one's got them on the exchange right now. And this is again telling us that we have to still believe this crypto cycle is going on. Now, if it follows similar cycles, you can see here Ethereum ekes out positive in December, then generally tends to boom Jan, Feb, March, April, and May. Will it be the same? I don't know if it'll go to May, but certainly we'll be watching it into 2025. And you've also got to remember this is how it kind of tends to look. So really the lion's share of gains for the Ethereum market have been had during the start of 2025. And what we think here on the channel is that we're a little bit forward on this. So we're about a month in front of all these runs. So that's why I wouldn't be banking on May too much in 2025. In terms of dark pool liquidity, we saw somebody that was probably pretty smart from Wall Street dump the highs on Bitcoin. Since then, every single test has been sold off, and it's creating basically what you'd usually like to see, which is a nice pit or pullback in time on the charts. And we'll go through our Bitcoin and Ethereum thoughts in a moment on charts, but that's pretty important. Now, last 24 hours, yeah, China came out, stimulus, what happens? Metals go wild, which was one of the metals we were looking at together. Well done, guys. I'll give you a clap. Silver, very nice. Absolute banger trade. Another good one here. And just again, showing that there are other opportunities. Abundance mindset, super important here on the channel. I'd love to think a lot of you are starting to apply it. Some of you probably think, what the hell are you talking about, man? Abundance mindset means nothing to me. You've just got to consider that every time you feel an emotion in markets, you're probably making a crappy decision. If you feel fear, you're making a crappy decision. If you're feeling greed, you're making a crappy decision. If you feel indifference, but you're looking at the data, the stats, the TA, the replication, all these things, you're probably kicking some ass. So maybe that's a good thing to kind of start thinking about in your kind of thought process here in markets. But yeah, big trade coming in on silver funds. That's showing again that, yeah, it's probably a real move, and it's likely they're starting to acquire into silver, which is considerably down against gold, as we've shown many times by looking at that. Now, it didn't really matter which of these major kind of Chinese stock funds you were in. Big trades were coming through in anything, and they were all just ahead of the news. And you can't tell me there aren't loose lips when it comes to China and any other stock market. Have a look at these ridiculous trades. So all of them came through, ripped higher. I'd like to think you're even before this, but we started to see this really appear a while ago. When it comes to earnings, some ones to watch out for. GameStop after the Tuesday close, guys. We've got Broadcom, Costco, Adobe. These are the big moves. And do remember, it's CPI, so the inflation numbers are about to come out for the US. This is a pretty important read. Of course, the jobs numbers is bigger, but still, that's probably the second largest you get every month. What about the stock market? Are we concerned? Well, the answer is not really. I mean, when you think about this, is this still an upward trend? Generally speaking, absolutely. Still a series of higher highs and higher lows on things such as the daily chart. Now, generally, you want to be looking at things like volume. As volume started to decrease, sure, but I still think it's relatively okay. And in general, we're just seeing a period which we always expect a pit, which is a sideways market like here, or a little bit of a dip. And will dips be bought? You have to think at this stage, yes. We've looked at all of the health kind of symptoms. The markets just don't look weak. And of course, a lot of this will come back to the options in a minute. When we look at the futures, these are the highs and lows. 68% of the time, the market will stay between these options levels. And notice where we found problems. Yeah, 6,100. Why? Well, it's a call wall. It's a massive call wall. Just like 6K was a call wall, then we moved to the next one at 6,100. This is a huge deal. Getting through 61 will probably give us 62 plus. And at this stage, where could we go? I think it's somewhere around 56,000 to 59.50 makes the most amount of sense. That's kind of the level that I'd like to see buyers back at. But let's take a look at options over the next 24 hours. Wow, look at this. 60.50, which is where we closed, is now a huge put wall. Now, if the markets get through that, where's the next level? Yep, you know it, just on 6,000. Look at 6,000 again on the next session, and again, look at these puts. So over the last 24 hours, puts were stacked. We did not see these on the weekend video. We did not even have them in. So as soon as the market goes down, bears are coming out and they're like, I'm going to short the absolute rubbish out of this market. I don't think that's a great idea, but anyway, that's what they're doing. So you can see here clearly that even though I think 59.50 is a possibility, 6K will probably be a little bit too much if we go that low. 60.50 over the next 24 hours, though, would theoretically be a good holding kind of position. So we're really in that first little pullback, and straight away you're seeing puts absolutely go in across the board. 6,100 will be the big mark for the future, though, as you can see here. And we're looking towards, of course, the market eventually getting 62, 62.50 by the end of the year. When we take a look at Tesla, 400 hit, bang. Well done, guys. Traders, very happy with yourself, I'm sure. 400 to 407 is a great target for a trader. But for an investor or swing holder, will you be concerned? We're in positive gamma across the board. Things still look very, very nice across the board. But yeah, I wouldn't be too concerned here in the markets. Basically speaking, this is the type of thing that you always want to see. And generally, if we get through 400, things are going to fly. So just remember, as long as Elon and Trump are still friends, it's all good for that stock. Don't worry about your fundamentals too much at this stage. The market is pricing in future potential. NVDA, same thing, struggling a little bit over the last 24 hours because of the news coming out about China having a bit of an investigation. But just remember, 148, 150 is all you really need to care about. Ignore the storyline, ignore the news, unless you really think it's the absolute end of the world, and you'll find you actually do better. But we'll look at that chart in just a moment. Let's get some of the early charts, though. Let's have a look at some of the leads. First up, yields, no much changes, a little bit up for yields. That pushed down treasuries. Still holding nicely, though, treasuries above this kind of bull zone. Again, any pullback, especially down to the low 90s, let's say 91.50, we'd have to expect buyers to be around that level. It's probably hit a temporary peak now, just for the next couple of days, maybe a week. What about the skew? The skew is really high. In fact, we haven't seen the skew this high since June of 21. Now, we'll go into this in our next video, but this is a pretty big deal. Very high skew, certainly interesting to watch. US dollar, finding buyers still around this daily 20, still not above, still not below. We just don't have that much read on this yet, but we will be watching the US dollar closely. Gold breaking to the upside, continuous central bank purchasing is helping it. Now, quite a few people are sending me messages. Michael Saylor wants to create a Bitcoin reserve and sell gold for Bitcoin. I think that's a stupid idea, frankly. You may agree or disagree with me. Why can't you just buy a bit of Bitcoin as well and hold the gold? You don't need to sell the gold. Why do I want to sell the gold? Like you guys know, I'm bullish on gold to 3K plus over the next year. And I don't really see a reason in the current day and age you would get rid of gold. In fact, anything that's a money print fiat kind of machine would be good. It's tried and true. It beats money print over the longer term. So what do you guys think, though? I'm interested. Do you think that we should sell gold, or in this case, the US should sell gold? I guess me saying we would be Australia sell gold and buy Bitcoin reserves. Or should we just basically say, let's hold the gold, baby, stack that as well, and then maybe you can create Bitcoin reserves in the future on that, buying some now and buying some maybe at cheaper prices. Would you really want your country buying them at 100K? Let me know in the chat. So in case of this particular trade, though, gold looks pretty good to the long. Of course, breaking through that 26.67 is good. That's certainly good, but silver looks better. And we've said that for quite a few days now. Silver absolutely blitzing, improvement on improvement on improvement. This was the first really good buy. Obviously, we got a good buy over here as well, but this was a really, really, really good buy. Super replication from our day trading masterclass there. In fact, it's already up probably about 3 or 4 to 1 on this trade. And you can see here that then we saw an improvement again, making you want to hold. Then, of course, we've blown through 31.50, which is great. And then we're pushing towards 32.50, which is, for some people, the supply and the take profit. I could see silver going to a new high. And if it really starts to ramp, that's what it's going to do. It's going to go through 34.60. Now, maybe let's not get too hyped just yet, but this is a double bottom now for bottom pat traders. There's a lot to like about that chart. It really is kind of like a nice technical setup across the board. US oil, boring. Okay, this is boring and possibly disgusting looking chart. Now, a lot of people will try to buy the mid 60s, 67, that type of thing, and buy it back up to 71. I'd caution on oil. It just looks really weird. Tesla, 407 was the topping area that we thought, but obviously 400 to 407. Couldn't hold above 400. No surprises. Such a huge call wall there. There's going to be sellers every time. Is this negative? I wouldn't say so. I think the trend still is up. And of course, that's a long leg doji. So it found equilibrium for now. If it busts through and holds above 400, could be really good. Let's talk positive gamma. Semiconductors coming in with bad news, but still really nice on the price action. You might think, oh, they look terrible. Now, I could see it even going to 241 and then buying. Overall, still decent. There's replication on this particular trade. And if you look at it over a 5, 10, 20-day kind of period, I could see semi still doing well. NVIDIA's come back to where we saw that huge bear buy, which sits right in here. So again, what's it done? A long leg doji. That means we've got an equilibrium. We're at a very interesting point. If we gap up over the next 24 hours and find buyers again, that's going to be a big deal. We probably don't want this particular low being taken. It would be ideal that that doesn't happen, okay? So that's where I would think that the safest stop losses are for now. But NVIDIA needs to break through 148. I got Ethereum on the mind because we need to talk about it in a moment. But yeah, it still looks okay. Now, the one that looks really bad has been AMD, the weaker of the bunch. Now, I did think that maybe this was improving. So I thought this might have been an improvement here. But I did caution in our Monday stream. I said, you can't buy it if you'd already bought it, because the problem was, or if you hadn't already bought it, because the problem was it was tanking, it was coming in with a futures market low. You had to get a bid. And it's just the weakest. And this just shows you again that trying to bottom pick out the weakest rather than buying strength into strength or strength into good TA, sometimes it doesn't always hold. Getting to a very good level though, we will watch AMD. Still expensive on the fundamentals, but we'll check it out soon. HK50, so obviously when we look at the HSI and China stocks, absolutely rampant buying yesterday. No surprises, 7.93%. A lot of you guys in Yin. I actually found that Yin was a top 15 leveraged fund in the US now. So I don't know if that's people in this community or what's going on, but a lot of people trading leverage nowadays, guys, which we'll have to talk about soon. Beautiful invest head and shoulders style trade. Obviously replication in here. It's hit the first target straight away. 21,250 is literally your resistance. So I would like to see it kind of chill, find out more clarity on the information, breach this area. We breach this area, new high is what I'm kind of thinking at this stage. Obviously, a lot of you want to look at Barber and others. Just remember, all of the stocks will be on an improvement scale, especially the big ones in tech. Aussie 200 falling off a little bit. Still remember, overall trend is up. We're certainly not even at the key supports yet of 8,200, but yeah, overall trend is up. And if you look at the US 2K, it's dropped a little bit, but still hovering around that daily 20. Still like this market, still looks bullish overall, hasn't made a lower low. We're looking for a sign though that it wants to go bullish again. So we haven't got that just yet. NASDAQ, again, showing signs of probably a little bit of a temporary top. When we get these types of reads, you can see here the reads that we're getting. Yeah, it just means kind of like sideways. It's no surprises. It's in the stats. We shared that just before. Ethereum, Bitcoin. Now, Ethereum has a lot of work to do. Obviously, we need to get back to some form of equilibrium to Bitcoin, which ideally would push us into a 0.0, probably 7 reading. But in this case, look at this. We have 0.04 high. Set that alert on your Ethereum, Bitcoin. If that happens, it's on for the Ethereum trade. And what I mean by that is alts, everything is firing. This was the first resistance, okay, for where we started to talk about Ethereum improving, which was about here. And we've liked it so far. I don't think it's done for Ethereum. In fact, the chart looks good, which we'll look at in a moment. But yeah, we want that to break this ratio. That happens, good times. Let's move over to Ethereum. It's holding exactly where it should. In our videos, we talked about the idea that we could get down to these levels in here. 3750 was kind of where I thought it would find SUP. This is also good SUP. This is the daily 20 moving average. You'll notice that it's bounced once off that. I really want it to bounce again off that. That would be fantastic. I think a lot of people levered up, got smashed over the last 24 hours. You can see the flash crash nature of crypto. Even though this may not seem like much, to a lot of people, this is huge. So it's 14.25%, which is still, that's like going into a correction on the S&P straight away. So that's a pretty big deal in many ways. But this is where you want to see buyers. Worst case, it can come down here, but it must show wicks. I want to see wicks. And so far, there's a little wick here. So let's see if it can actually find bid. Generally, small timeframes can tell us a story, and you'll see it's tested the low twice and again rebounded it twice. That's not terrible. I'd like to see it consolidate here at 37.50, if not go and find buyers. Bitcoin's still very strong. We see, of course, hodlers again. Look at the wicks. The wicks are good, so that's a good sign. Everyone's buying every time it comes down, and it's just kind of slowly melting up. Now, if this distributes for too long and then sells off, that's going to be a problem. But at this stage, it still looks good, and we're not seeing Bitcoins flow onto the exchange, so we've got to believe that hodlers are floating around. Guys, CPI is pretty much the biggest news coming out on Wednesday, so we'll talk about that in our next video. Make sure to subscribe if you're interested as well. Follow us over on X. And in summary, I guess it just shows you again that if you have an abundance mindset, there are a lot of opportunities. We just saw China pop off. We've been looking at that for 3 weeks, and obviously it's popped off in a big way, which has been awesome. But if you'd waited, if you were patient on that silver and other metals and put together the story, that could have been an opportunity. Ethereum has been another one. While Bitcoin hit crescendo, MSTR, everyone was FOMOing over it, Ethereum actually outperformed. Now, it may look bad over the last 24 hours, but I think overall it's still been doing very well. So just remember, there are other opportunities. We cover a lot of stuff here on the channel. There's always another trade and investment. Bye for now. Sub. We'll see you soon.